I sold another holding of mine, and that's Bank of America, but it's not for the reasons that you may think. So let's first look at my portfolio performance. This is something I share with every single video, and you'll see in the upper right-hand corner, Bank of America is gone from the financial sector, and now it's just SPGI. Now, overall, my portfolio is holding up very well, in my opinion. It's only down 1.72%. There's a pretty big sell-off this week. I'm only down $963. And I think Microsoft is the one that's really propping up my portfolio. It's been doing really well. And so overall, this portfolio, I want to become my dream portfolio, holding companies that I have high convictions on, that I feel are of high quality. So there will be more change to come, but this was the one I made this week, and that was selling out of Bank of America. Now, I am a long-term investor, so I want this portfolio to eventually make up companies that I plan on holding for 10 or more years. But right now, because this portfolio is 3 years old, in the first 2 years of my investing, I will say I made a lot of mistakes and I got into a lot of holdings for the wrong reasons. So now I am making the changes so that way I can have that dream portfolio, and going forward, I can hold long term and start averaging into these companies that I think are of high quality. So if you like this type of content, be sure to subscribe. I share my strategies. This is an investing journey towards wealth, and I think you'll pick up a lot from it. So let's get started with Bank of America and why I sold. And let's look at their stock performance year to date, and we'll see that it's down 16.82%. Of course, the last week it's had part of that sell-off with the banking crisis, they're calling it. But if we take it out to all time, this tells a story of a lot of the banks out there where we have seen some massive dips over its history since 1983. In fact, I circled 1983 and 2009 because in 1983, this stock sold for about $3 and change per share, where in 2009 it went down all the way down to $4 and change, which shows you that these banks are tied to the economy, and when the economy doesn't do so well, these stocks go down with it. And right now, the last yellow highlight on the very right of this chart, I think we're starting to see another big downturn for banks, and I think it'll happen continue to happen, shall I say, over the next couple years. But this to me just shows the volatility, it shows the risk with bank stocks, and long term, if you look at other companies from the 80s or the 90s, you will see a lot better gains. And to me, there's just better investments out there, which is why I want to get in now to the reasons why I sold Bank of America. And I want to make this clear. This banking crisis was not a factor in me selling Bank of America. It had nothing to do with it. I've been considering selling Bank of America for a long time now. And let me share why that is. First of all, I do think there's a recession on the horizon, and that could weigh on the banks pretty heavily. And I see a lot of downside in the next couple years, and I think the main reasons are we'll see less loans being taken out, and that's money that these banks make because their interest rates are really high. People don't want to take out loans because of that. And then if money is tight, I think loans, debt is something that people are trying to avoid as well. Not only that, I think the customers of these banks will have less deposits that are held with these banks because when money gets tight, they're having to pull out more money to pay bills. They're not able to keep as much, especially in a high inflation environment. So I think there will be less deposits with banks, which is less money they get to invest to make money. And that's another reason, as well as net interest margins, which I'm going to explain more in a little bit because it's a whole point in itself. But I think their net interest margins will decrease, which is not a good thing. And then lastly, with a possible recession, I think that the fees that banks charge will be reduced because there will be less banking activity as things get really tight for its customers. So these things I think will just continue accumulating over the next couple of years and put a lot of pressure on banks. And I do think we see more downside potential than upside potential, and that's one of the reasons why I sold. Another reason why I sold is, again, I've had this portfolio for 3 years. I bought this stock early on, and I bought it for the wrong reasons. I bought it because I listened to someone else say you should buy Bank of America, so I bought it. I didn't at that point have the strategy that I have now, which I will share at the very end, so you want to stay tuned. Luckily, I bought at a good valuation, but my strategy is not listening to someone else and buying. No, I like to do my own research and stick with something that I will show you at the end. So that's another reason. Next up is banks are highly leveraged and they're complex businesses. There's a lot to them, and I feel I don't want to put forth my effort to learn all these areas in this sector that I feel is riskier and more volatile. I rather put my attention towards other companies and sectors that I feel more confident in, and I feel I'm able to understand what they do and be able to do a better analysis on them. So that's another reason why I decided to sell out of Bank of America. Now let's get to that net interest margin. This is the interest that banks pay versus the interest that banks earn. And that's the ratio that they come up with, and that's the net interest margin. So the higher the margin, the more money that they're bringing in interest, and the lower the margin, the less money they're bringing in. Right now, because of the Fed that has raised rates so much, net interest margins with all banks have gone up drastically. So those are very healthy ratios right now. But I feel they're at a peak or nearing a peak because right now we have, the rates that are high, but we're starting to see loans decrease, the amount of loans that are being taken out, which those loans help generate money for banks. So when those go down, they make less money. And the rates won't go up forever. So I think the loans will start to crash. The rates might go up, a little bit more this year, but I like they're predicting, I think next year is when they'll start going down. But at that point, when the rates start to go down and their loans are already low, I think the margins from that point will only go down, and you'll see these margins right now be at all-time highs, and they'll go back to average levels or low levels in the future. So I think that's something to consider, and eventually the market will catch up with that information and see that, the banks, as far as the interest that they're bringing in, that's money they're making, was really good at this point in time because of the high rates. But going forward, I think it'll start to decrease, and they won't be bringing much in as far as that interest. So net interest margins will decline, which is why I sold out of Bank of America, because I think they're at a peak or near a peak right now. The next reason why I sold Bank of America is due to the volatility of the banking sector and how they're tied to, the economy too much, too closely, where when the economy has a, hard time, some hardships, banks fall with it almost every time. And to me, that's just risk for your portfolio. It reduces the amount of gains and profits you can make long term. We saw that chart over its history. It's not that impressive. And so that's another reason why I sold out. Also, the other reason is I feel Bank of America is overvalued. I don't feel it's as attractive as JP Morgan or Citibank. And for me, Bank of America is a buy under $25, and over 25, it's a hold or a sell, and I decided to sell. And that's just my opinion based on looking at their metrics, their financial metrics versus their history versus the other banks. I just feel they're one of the more pricier banks out there, and there's better options if you are going to invest. But there's still a great option, and I'll explain that too in a minute. Lastly, the main reason I sold is, a month ago, I did a lot of changes with my portfolio. And one of the reason why I sold some stocks is I put them in a bucket if they were less than $1,000. In other words, if I invested less than $1,000, I put them in this bucket and they were on the chopping block. Well, Bank of America, I have invested less than $1,000 in this stock. And the reason why I didn't cut it then is because I already did a lot of change. So I decided to do it this week. And I wasn't planning on adding any more to this stock due to the other reasons I mentioned. So I felt it was time to sell, and I still made a 15% gain on that sell because I bought in at a good time a few years ago, which I'm thankful for. And that's one of the main reasons why I sold. It's just I have so little money invested in it, and I didn't plan on adding more, and that's why I decided to get out as well. So all these reasons are why I sold Bank of America, but I want to say this. Now I have one less holding, but my portfolio, I feel, is more diversified because I took my gains, I took that money from selling Bank of America, and I put it into SCHD, an ETF where I sold out of one company and bought an ETF that holds over 100 companies. So I feel though I'm one less holding, I put money into an ETF, which is actually making my portfolio more diversified, which is a good thing, as well as SCHD pays a higher dividend, where Bank of America is just shy of 3%, SCHD is nearing 3.5%. So I think it was a win-win for me. I'm lowering the risk of my portfolio, making it more diversified, getting a higher dividend yield, and to me, it was a no-brainer. Now, I will say this, if you like bank stocks, there's nothing wrong with them. And you just got to make sure you find good quality companies, you do your research, you stick to whatever strategy you have, but now might be the time to start buying in slowly if you do like bank stocks. And so Bank of America is not a bad company. It's not a bad investment or stock. I just don't think it's the best out there. I think it comes with risk, volatility, and those other things I mentioned, which is why I sold. But I'm not saying it's a bad investment. I still think the banking sector offers some opportunity, but for me, I didn't see it as a long-term investment that I want to hold on to that would make me a lot of money compared to the other stocks that I have. Which leads me to my strategy. What I'm sticking to is this quality checklist, and if a company checks off all 6 of these items, to me it's a buy. If it checks off 5 of the 6, I highly consider it. If it only has 4 or less, I do not buy the stock. And this is just what I stick to because I did a lot of research, I put a lot of thought into this, and so if a company has solid financials, a good management team, brand recognition, good products and services, if it has a large moat, and if it has a good valuation, where I look at the financial metrics and compare it to its history, then it's considered a high quality company that I add to my portfolio. And this is what I do. This is my strategy. And you're welcome to take this, look at it, change it up to fit your own strategy. But I think it's good to figure out that strategy that you want to follow to make sure you can find and hold and buy those quality stocks that long term will really provide you some great gains, and stick to it. And that's what I'm doing. So I'm getting rid of those stocks that I bought early on that don't fit this quality checklist, and I am focusing on the stocks that do. And so this is just another part of the change in my portfolio. So there you have it. I sold Bank of America. I'm getting out of the bank stocks altogether. I put it in SCHD, which I feel is more diversified. And SCHD, their largest sector in their ETF is the financial sector. So I still feel I'm getting that financial exposure. I didn't completely sell out of a financial stock and go into something completely different. I'm still getting that exposure through SCHD, plus, having more diversification, safer, and I just think is a win-win. Let me know what you think of me selling Bank of America. It has nothing to do with this banking crisis. And so this was just a decision I decided to make, and I'm continually changing my portfolio to make sure it's my dream portfolio. And there's still some stocks I have my eye on. I'm laser focused. I'd love to get them, but I got to make sure that it fits my checklist. And sometimes that valuation is what keeps me from buying in because I feel they're just a little overpriced. But stay tuned. There's still going to be a lot more changes. This was one this week that I made, but I'm building up this portfolio to be very strong and long-term make me very wealthy. So be sure to follow, subscribe, and let me know your thoughts and your feedback if you think I made a good decision or a bad decision, and if you are selling out of bank stocks because of the banking crisis that is going on now, or for other reasons, or if you're buying because you feel now they're at good valuations. For me, I think the banking sector still has a lot of volatility in the next couple years, and I still think that they're not the best long-term investments, but that's just me from my research, but I'm open to hear what you guys have to say. And with that said, I hope you guys have a great day, and we'll see you next time on Mark Arnold's Finance.